The S&P and the NASDAQ also in the green as Doug Flynn joins us, certified financial planner, co-founder at Flynn Zito. And I want to talk about meme stocks with you. I know the market was up today. Good news. However, this is interesting to me because remember that the whole craze with GameStop, right? GameStop was the meme stock, kept going up. Everybody said, oh, it's not, the fundamentals are not, anything what represents the stock. Now it's the Trump company, ticker symbol DJT. That's the new meme stock. Funny enough, GameStop was down today by like 15%, and DJT was up 14%. But are meme stocks back? Is Trump the new meme stock?
A little bit. I read it came out, and that was actually part of where all the meme stocks came from. But where this comes from is if you look at what the revenue of a company is and translate it to the value of the company, GameStop, as you mentioned, at one point was worth $22 billion in the market, and now it's about $4.7 billion. And there's a number of those. You remember AMC was worth $31 billion. It's now actually below $1 billion. And then you had Bed Bath & Beyond, which was $6 billion, and that's basically zero. So that's what they're saying. Either this turns into a viable company that has revenue and fundamentals will eventually reign to justify this, or it's just people pushing it. There's hype and hope, which is what drives things in the short run. It has to turn into fundamentals in the long run. Otherwise, a similar thing could certainly happen.
So what do you tell people, like a client or just someone about these stocks? Because sometimes it's like a sports analogy. People used to, it was Bill Parcells used to say, oh, you are what your record is, right? So the stock price kind of is what it is to some extent. But they made a movie. I'm only bringing this up. Everybody knows because I have a cameo in Dumb Money. Have you seen that? Dumb Money. But they made a movie about. It's not a terrible movie about the whole GameStop thing. And it's it's kids on college campuses. Somebody was working at Blockbuster and all this kind of thing. But they were making tons of money at the time, and to them it was real money. So what do you tell people who come in with one of these stocks, whether it's Trump or GameStop or anything else? Yeah.
So I think there's a couple different ways we look at it, but one of it is it should not be the core part of your portfolio. It's certainly fine to trade and have fun, but that's what these are. These are trades. They're not investments. Investments really do have earnings and have some value that's justifiable and has some forward projection. Everything else that doesn't have that is speculation, and it's a trade. There's nothing wrong with that, but that should be limited to maybe 10 or 20% max of your portfolio. Keep the primary part of your portfolio in what works and is realistically valued, and the rest you can play with, and that's fine. But I would not. I don't know what percentage of Donald Trump's portfolio it is, by the way, but that's another story altogether. Because unless there's some waiver, he can't sell for 6 months. But that stock is worth a lot of money right now. All right, second topic. The next topic for you. China. We haven't talked about China in a while, but it's back in the news. And one of the reasons, Doug, is because Xi Jinping in China brought in a bunch of American execs and he, had them in for a meeting. And apparently he's trying to say, we're open for business, keep investing in China. But at the same time, here's a big picture, big group picture of them all with Xi Jinping. Wall Street Journal had a story this morning which looked at a number of different metrics and basically said, now, unlike the old days, American companies are kind of stalling in China. So what's the future of American, and this is some numbers to represent this stalling out, what's the future of American business in China, given everything else that's gone on? Yeah, I think, they've got a serious problem. Their growth has slowed. And it's interesting to watch him take a more accommodating tone to America now that he kind of needs America. They need the foreign investment to keep this thing going. But they've got a lot of problems. They have a history of being a bad corporate partner. They have a history of being a bad citizen of the world. And they have a bad demographic. So now it's a huge market for U.S. companies. A lot of U.S. companies have, because of COVID and otherwise, have onshored and looked at other places to do business. And so the amount of exports that come out of China from U.S. and European countries is way down because they aren't the only game in town, and there's other places to go. And yes, we would all like to sell there, but at what cost? And that's the problem that they have. And they have not come through on these other things to protect the companies and their intellectual property and all of the things that they do that everybody over here, puts a blind eye to because it comes down to money. But in reality, they are shifting to other areas. And that's why I continually say, I don't know how we keep them as an emerging market. They are not an emerging market. They shouldn't get a pass on polluting and all the other stuff they do because they're not an emerging market. Let's bring them to the big boy table and treat them as such and compete. And this is what's happening.
I think that's
We're going
fair.
elsewhere.
That's a fair statement. And it's just interesting to see Xi Jinping now crawling back to the United States to some degree because, to your point, he feels like he needs the Americans. Doug, thank you, as always. Doug Flynn.